Greetings. Today we're going to be treating trading breakouts and fakeouts. This is a work on forex, stocks, equity in general, including options, bond, and all chart-related trading. This work is done by Twigby Eizege. You're advised to subscribe, like, and share this message. You can go through our channels for other important class and improve your knowledge on trading. So today we're talking about trading breakouts and fakeouts. When price breakout of some kind of consolidation, say support and resistance area, just as we have here, just as you can see, this is support area. See, price is consolidating. So when price breakout of some kind of consolidation or trading range, such as support and resistance levels, pivot point areas, Fibonacci levels, etc. The goal is to enter market right at breakout. So as you can see, this is the breakout point. So when moment price breakout of this consolidation, the goal is to enter the market soon as the breakout is effective. You can see what transpired here. So this is the breakout point. And these are the consolidation areas. At the bottom of this arrow is the breakout point. So the goal is to enter the market right at breakout and ride with the trade until volatility dies down. Volatility is when there is more movement in the market, and that is what this candle tries to explain. So there are usually two types of breakouts. We have what we call the continuation breakout. The continuation breakout is a period when trade takes a pause after an extensive move in one direction to see what they should do next. As a result, we see a period of range-bound movement called consolidation. If traders decide that the initial trend was the right decision and continue to push the price in the same direction, the result is a continuation of the initial trend. And this is a good example of what we are talking about. You see, there have been a huge trend, and traders have been buying this market up to this point. And on getting to this point, the price started what? Consolidating. At this point, the traders are trying to see whether to reverse the market downward or to continue in the same what? Direction. So this period is what we call the consolidation period. After the traders have realized the fact that the market will go in the same direction, you see what they did here was that they started what? Buying again. That is what we mean by a continuation what? Breakout. Another type of breakout is what we call the reversal breakout. The reversal breakout. The reversal breakout starts same way as a continuation breakout. The only difference is that traders decide the trend is exhausted and push in opposite direction or reverse direction. This is what we call the reversal breakout. So after price must have extended from this point up to this point, you realize that the buyers started feeling reluctant. And what they did at the end of the day was that they reversed what? The trade and started what? Selling. This is what we call what? The reversal breakouts. So you now understand what we mean by what? Breakouts. So let us now look at fake outs. Remember, the topic is trading breakouts and fake outs. Fake out occur when price break past certain levels, say support and resistance levels. It could be in form of a triangle or a trend line, etc. But doesn't continue to accelerate in that direction. In other words, price breakout in a consolidation point, but refuse to go in that same what? Direction. So what we are talking about also brings us to these parallel lines, these two horizontal lines. Price was consolidating, but at certain points, you can see in this arrow, for example, price make a breakout at this point, but faded back in. It faded back in. It did the same thing here. They faded back in. It did the same thing here. Faded back in. If you go down to the bottom of the support and resistance line, discover that price was also doing the same thing. Price actually couldn't break below these lines, these lower lines, and price couldn't break above these upper lines. You see, price is what? Consolidating. In other words, price is what? Faking out. It was only able to break out at this point. This is what we call the breakout. But these are what? Fake outs. These are what? Fake outs. Because price couldn't what? Break below, and price couldn't what? Break above. So you now know the meaning of fake out and how it is different from breakout. So it is like an opposite. Fake outs is like an opposite of what? Breakout. So a good way to enter breakout is to wait until price retraces back to the original breakout level and to wait to see if it bounces back to create a new high or low. Another way is by not taking the first breakout you see. Wait to see if price will continue to move in your intended direction. So when you see price consolidating, it's not wise for you to assume the price will continue immediately. Wait to see if price will break out until price break out of this consolidation area. And this is what it did by this candle. So you have to wait to see when this consolidation will be exhausted. And the best way you can do that is to draw a trend line, just as we did with this thing. Draw support and resistance lines touching two higher points, a minimum of 2 points, two support areas. This is one of it. Draw supports and resistance line touching at least two top or support lines, either at the bottom or at the top, and wait till price breaks out of this consolidation area. So the moment there is a candle that indicates a breakthrough, then you can continue to buy. So what about trading fake outs? How do we trade fake outs? Hold on, be patient. Support and resistance levels are zones. So fade the fake out. In other words, trade against it, knowing fully well that it will fail and price will reverse back, but do so in a short term. So the best way to trade fake out is to fade it. So the moment price gets to this consolidation point at the top of the resistance, fade it. That means trade against it, sell, knowing fully well that price will reverse to this point. At this point again, fade it, knowing fully well that price will rise at this point and move up. At this point again, fade it, knowing fully well that price will reverse down. So continue to fade it along this line of support and resistance. And that is the best way to trade fake outs. Fake out are simply range bound market. Most breakout fail simply because the smart minority has to make money off the majority. Retail traders like to trade breakouts, but the smart minority, the institutional, more seasoned, more experienced traders prefer to fade breakouts. This is where trading with more experienced traders is advantageous. So how do we trade fake outs again? We trade range-bound markets. Range-bound markets are best for trading fake outs, just as we have here. We draw trend lines, just as we did here. We draw trend lines, support and resistance lines. There are trend lines where price is consolidating, and wait for price to pop back inside after popping out. So wait for price to pop out, to pop back inside after popping out. In chart patterns such as head and shoulders, double tops and double bottoms, including triple tops and triple bottoms, are known for generating false breakouts. So they are very, very good at generating false breakouts. This is a double top, for example. This is top 1, this is top 2, this is even top 3, making triple tops. And if you go through the chart, you see other consolidations and see how price reacted during that area. These are consolidations, and they are good for trading fake outs. These are all consolidations. These are top 1, top 2, this is even top 3. The same thing here, the same thing here, the same thing here. So they are good at trading fake outs. So like we said, head and shoulder, double tops, triple tops are very good in trading fake outs. So the idea is to assume that the moment price gets to these horizontal lines, the tendency for them to reverse during consolidation is very, very high. So this is where professionals make a lot of their profits. Retail traders or less experienced traders prefer breakouts but experienced traders prefer range-bound markets. So this is what this topic is basically all about: trading breakouts and fake outs. And if you have any other questions, please do let us know. Remember to subscribe, share, and contact us for more important classes. You can go through our channels. We have a lot of important classes that you can benefit from. Thank you for being part of us.